Vincenzo's Go Crypto Investing this June the 2nd, 2020, or July the 2nd, 2025. Nightly cryptocurrency and blockchain technology. And you can see the Bitcoin had a phenomenal rally last night. We came off and hit just above the 50-day moving average and bounced about 5.5%, I believe, from the swing low to a new regional swing high, 4.5%. We're up about 3.66%. We're now just below the all-time high back here that was set at 112,000 and just below a couple of other highs here at 110 and then a group here at 110. And now we're a single pump away from a new all-time high, right? And that's what we're going to watch, as there's going to be a long holiday weekend at about business on tomorrow, 7 o'clock tomorrow. The major and the stock markets are closed until Sunday night with pre-market and Monday morning for normal business hours. Long holiday weekend. And I think one of two things are going to happen this weekend. You're either going to have a massive explosion this weekend, and this is a Vincenzo alert, a Vincenzo warning. I think you're going to either have a 4th of July weekend, massive pump to a new all-time high, up here near $118,000 to $119,000, which would be about a 9.5 to 10% pump this weekend, which would be a phenomenal pump. And I think that's either we're getting this big pump to the upside this weekend, and I can't stress this enough, bell notification, subscribe down below, share to get that truth, trust, education, and information as we work our way and learn and educate ourselves on my mission and your journey to becoming an asset millionaire, right? But we're either going to have a pump to about 118 or 119,000 this weekend, or there's going to be a big flip correction this weekend where we'll just use at the local high, where this weekend we could come all the way down to $89,897. That's my big warning for Bitcoin. There's a big, massive spread. I think there's going to be a big pop this weekend, a big explosion, a big breakout. And when I say breakout, it doesn't mean it's breaking down or breaking up. When you say breakout, breakout means breakout. Like this was a breakout the other day where we had a swing high to a swing low. We broke out to the downside, just as this was a breakout to the upside the last 48 hours. But I think there's going to be a big breakout. I think there's going to be a big move because we are in this rising channel that we've been in for a couple of years. You can see that right there. And we're either going to break up and make a run towards $147,646, another run at upper resistance like we did back here from November through about March, than we did back here in 2024, a year prior, March, April, and May of the year prior, just as we did in March, April, and May. It seems to be when we hit upper resistance in 2023. Then we hit lower support in July, September, October. And then the next year, July, September, October. Then the next year, March, April, May. And now we're in July and we're getting near lower support. So we'll see. There's a little bit of a trend there, but a little bit of a divergence. So we'll see this weekend. I think there's going to be a big breakout this weekend. And I'm just giving you that warning with those prices. The same thing with the Ethereum. Had a skyrocket today. And now we're above the major moving averages. You can see we pumped about 10% today. We're above the major moving averages. And we know when we're above the major moving averages, our target is up here at $3,067.10. If we're below those major moving averages, which you can see right there, but you can see we're well on top of them, your underneath target is $1,803. And obviously, as long as we're above these three moving averages that are now starting to trend up again, but they're all still uniform, the 50 is actually starting to uptrend because this local move, which if it is sustained, you would have a bullish cross there. But you can see you're well on top of that. And as long as we're on top of that, you're bullish. If you get back below that, you're bearish. And those are your two targets that you're going to be looking for. You can see the XLM price is trying to pump up after a regional double bottom. You can see our cycle low so far is back down here at about 20 cents. Our regional double bottom is trying to form here. Our major resistance zone is this 25 cents and these overhead moving averages ahead. And you can see you've been consistently declined that we don't want to buy that, just as we've been consistently rejected by these overhead moving averages ever since we flipped these moving averages back here in February after the cycle high of 63 cents back here late November and early December of 2024. And if we're trying to get bullish here and continue this little miniature pump that we're having, you got to spike up and continue to pump up, which you could do this weekend, and come up into here and hold this 25 cents now as support. And if you do that, you can do sort of what XRP is doing and come all the way back up here to the 30 cents. And from where the current price is, that's a very big move, right? So that's something we're going to look to see if that happens over the weekend. If this gets rejected and can't get back on top of this 25 cents, your next major underneath support is down here at the 18 cents. If we look at the XRP, you can see the XRP is what we're talking about. What XLM could do is you can see the XRP was down here like the XLM last week, but the XRP did actually shoot and rebound, got back above this 209 neckline support, back above this 210 now, slightly above the neckline support, 200-day moving average. It's now above the 50-day, and it's above the 200-day, and that's something that we're seeing if the XLM would do. And as long as we're above those areas, you can remain bullish, and you can see where you're at. Every time recently you've gotten up here, you've gotten chopped down. Tried to get above it. Oops, get rid of that. Tried to get above it right there, got chopped down. Trying to get above it again. And currently we're sitting right on the 100-day moving average. And that's what you need to stay above to stay bullish. You can see we have a big mean and volume here right here. And that's why we keep getting rejected around this $2.37 level. As you do know, we've been calling for lower levels since this 340 local top back there in early to mid-January. We have this 209 neckline support. We have a potential $1.29 technical target from a head and shoulders reversal pattern, but we continue right now to get support on the 209 neckline support. And this weekend, just like the Bitcoin, if we pump our bullish scenario to the upside as we come all the way up here to about $2.66, just taking out the regional high from back here in mid to late May. But if we break down, we're going to confirm below this neckline support over a long holiday weekend, and we will slip all the way back down on a major flip to resistance to $1.61. So there's a big areas that we could pump this weekend. The AMP is back on top of the major support level after we had this brief breakdown, and this is the area that we need to hold because this is the pattern that we think we're in. And if we continue to hold this weekend, we could make a reactionary miniature pump, something like this, right over the weekend, and then maybe come back down. But we want to stay within this pattern, and you can see again, just like the few times back here, then again right there, then again here, and now with this local double bottom, every time we've tried to wick down out of this pattern, we've wicked back in it, but the overhead moving averages have been acting like major resistance ever since about mid-December, late December, since about this time frame right here at the beginning of that. So that we need to stay above that in the AMP in this weekend, and that's what we're looking for. If we slip out of this weekend, this is your major underneath support, and your major overhead resistance this weekend is the 200-day moving average in the daily time frame. The ALGO is the same thing. You can see we tried to make a run up the last 48 hours. We've come up and hit upper resistance beautifully again at the 50-day moving average. You see that in the daily and at the 20-cent major horizontal resistance, like we hit one on the green candle there and hit it beautifully again on the red candle there. And that's your major resistance. This weekend, if you want to get bullish, you got to get back on top of that 50 and on top of this 20 cents, and you could shoot up very quickly back up here at the bottom part of this red resistance box up here at about 23 cents. If you get rejected and pull the classic hook nose reversal pattern this weekend, you could slip very, very quickly and make a run down there towards the 10 cents over a long, thinly traded holiday weekend after a massive pump in some of these coins on the weekend. The other day here in XCN, you can see we pumped up to the overhead moving averages. We got rejected by the overhead 50 and the overhead 100, and now we've gotten rejected back below the major purple resistance zone, but just above the 200-day moving average. And that's what you need to stay above, the 200-day moving average, and more specifically that top part of that purple zone at 0.0147 cents to stay bullish. And if you can do that this weekend, you can see how I'm getting support and resisted by these boxes. But if you can get supported on that this weekend, you could try to come back up into here and make a run up towards upper resistance. If you get rejected and slip below the 200-day moving average, you'll come back down here this weekend. We'll have a lot of updates over this long holiday weekend. I expect a lot of volatility, a breakout, a blow up one way or the other. Peace in the direct eyebrow, Jay.